Now, analysts at UBA report a bullish fixed income week on the back of improved system liquidity from FAC inflow and coupon payments of 103 billion naira. But they say the forex market in Nigeria remains quiet and undersupplied. Nkem Azinga is a currency trader at UBA. She now joins me for a review and an outlook. Nkem, a pleasure to have you join us on the show. What moved the markets this week?
Hi, Christy. Thanks for having me. Like you said, largely driven by liquidity. The Treasury bill market began the week with buy sentiment, especially in the almost space. And this followed the fact that we got the FAC credit, the Federal Allocation Funds, coming on Monday. So that boosted system liquidity from the previous week where we saw that liquidity was very tight. There was no OMO auction at all, so we saw that in the secondary market, there was a lot of buying going on there, just given the liquidity. Today as well, we saw that buy sentiments continue. In the Treasury bill space, basically, we saw yields in the OMO space drop by about 50 to 60 basis points across the curve. In the NTB space, it's been relatively quiet. There is demand there. But because of the fact that there's limited supply, the only kind of trades we've seen go through there are retail-sized trades. But the bond space is where we saw most of the activity this week. Overall, on all classes in the fixed income space, it was buy-side. So the bond space, there was also buy-side sentiment there as well. And this followed the fact that we got coupon payments coming at the beginning of the week and midweek as well. And there was also a bond auction. So market players traded cautious, but they were also picking good yields on the curve as they saw along. So the auction that was held on Wednesday, yields dropped there. And due to that drop in yields I think the DMO dropped yields, stop rates by an average of 190 basis points across the curve. So because of that, we saw players go into the secondary market to try and pick up good yielding instruments there, further pushing yields in the bond space lower. So basically, we saw the auction coming. A total of, like I said earlier, subscription was 3.6 times. The DMO sold 177 billion across the four tenants, as opposed to the 130 billion that they saw. So it's basically just been a bullish market due to the auction and improved liquidity.
Nkem, what's been happening in the FX trading space? It looks like when you compare with activities that we saw in the last couple of weeks, it was a rather relatively quiet space when you look at the policy direction from the CBN.
Yeah, the FX space does still remain quiet. To be fair, the volumes that we saw are lower than we've seen last week. It's actually more quiet there. And it just drives the fact that there is a lot of supply limitations in that space. There's a supply limitation in that space. And the fact that we see players who are looking to buy FX and can't get it in the INE market, some of them can't get their full allocations at the retail. You see that pressure is beginning to flow into the black market, where we've seen rates now go up to 470 levels. So the pressures still exist. However, the CBN continues to intervene in the retail and SME space, and they continue to provide FX to the agriculture and manufacturing sector. We expect that the pressures would persist as long as all prices remain deflated and as long as the CBN doesn't intervene in the INE space. They don't bring back the wholesale auction. And as long as we're also not seeing them selling to BGCs, there would be these pressures. There's a general international increased demand for dollar, so that's just trickling down to Nigeria.
So 1 month, again, nearly gone in the second half of the year 2020. Give us a sense of your outlook for the rest of the year for now.
For the rest of the year? Well, going into next week, we can start with that. We expect that the buy-side sentiment will continue, just given the fact that there's improved system liquidity. There were a lot of unmet demand at the bond auction, so we'll continue to see that go into the bond market as well. There's also expected coupon payments of about 50 billion coming in next week, so that would also spur the buy-side sentiments that we would see in the bond space. liquidity has improved today with no CRR debit, no OMO maturity next week, and possibility of no OMO auction next week. We expect that we'll continue to see the buy side sentiment in the market. Into the rest of the year, with the way yields are right now, logically and looking economically, it's difficult to say that the yield could stay at this level. It is only expected that after a little while, we'll start to see yields slightly inch up, just because of the fact that people wouldn't want to buy a 50-year instrument at 8% or 7%. It just seems ridiculous. So I believe that going towards the end of the year, we'll probably start to see yields gradually creep up and probably see a further depreciation to the Naira, but nothing too serious here. This is all barring that there's no policy change, nothing done by the CBN to make sure things remain where they are.